Okay, beautiful. Yeah, so guys, last week we had two trades that we looked at, which was we had the Euro USD and we had the gold trade that we dive into. So I remember saying on gold, the safest option was Thursday and Friday. Was between Thursday and Friday would be our safest option if you want to go into gold. And let me just quickly load up the seasonality chart. And what happened was price didn't even do any of that. So none of that literally happened. The move for the gold last week didn't even happen as we expected it to, because ideally what we're looking for was gold to fall back, to fall back into the zone and then pick off gold from somewhere. I think somewhere around here. I was thinking to pick up gold from. But what happened was gold got stuck above the 20 EMA on a daily, and then slightly below it. It's just not moving. And I remember when I was talking about this last week, I was like saying, if price goes up, just wait for price to come down. When Thursday came, what price did was came just into the tip of the green zone, but really didn't really do much. I mean, for people that might want to have jumped in, I wouldn't even have jumped in at this spot anyway. I'll have just watched it. I'll have been hoping for it to come deeper into the green zone. But since price didn't do that, so I wasn't able to get entry from last week. But I still have the entry from the week before. So it's kind of a shame because I know a lot of people want to want to jump on the gold trade, but that trade isn't really responding because so far it has already given us the guys that traded on I think on this date that we meant to trade is already giving 500 pips, and we're still holding in 500 pips in profit. At one point it got to 600, but we're still in 500 pips in profit and still holding on that one. So it's kind of painful for the guys that missed this entire run and still waiting for the next wave to come. I mean, if guys have gone in between here, as I speculated last week, wait for price to come into the green zone, or at least when price is above your EMAs and you get entry signals, that's where you should go in. So for the guys that wasn't able to get entry, it's painful, but this is part of the game. You have to learn how to wait for the right time. So in regards to that, when we look at gold, we were expecting the move to happen, around here.
Yeah, call this one. That's on 50,000. Call this one.
Guys, I'm just gonna have to mute everyone for a second. All right. We're expecting price to move around here. I think 18th, which should be Thursday. No, so 1920. That's when we're expecting price to move. And 20 was the highest peak in the 5 years. So, but what we saw was just not cutting it at all because price literally didn't move. So throughout last week, price consolidated. So, which then leads to what we're gonna do next with gold. What are we gonna do next? The next thing is just to still wait. We have to wait. The majority of this game, 80 to 90% of the time in this game is waiting game, being patient, and taking that move when it comes true. So I'm just gonna quickly go on to gold and look at what's happening on the COT report. From the COT report, they're going short. So and the short that is showing right now, if we look at the gold seasonality chart, I mean, we're due for a short. Today is the 22nd, so the market is going to open today by 23rd. See, that short is coming, so at least we're going to expect that short to last up until about 27. Now you can see from here, price doesn't really align anymore, because from this point on right here, we're out of alignment because the 5 years seems to go down, but the 40 and 15 years seem to go up. So this is where the main gamble comes in. This is now, I said the word gamble very strongly. I'm emphasizing the word gambling coming into play because now there's no alignment. Because ideally, what we expect is gold to rise up until at least September. What's it called? September the 6th, and we might not get that opportunity anymore in regards to the rise that we're expecting. Maybe on the 26th, we might get that opportunity, the final opportunity that we're waiting for on gold to go in. But beyond that point, any point from here, 28 right here becomes a gambling point. And so far, ideally, I want to take about 1,000 pips off the table from this. I've been only be able to get maybe 500 so far, and I know some of you might not have been able to get any because of the way everything has set up recently. So that being said, with gold right now, looking at the COT report, we see a short coming, right? They're selling, they're dumping gold, right? We had the buy momentum for last week, but it didn't really do anything. Price actually ended up consolidating. Then the short is now in play. And to back up the short, we can see from here, the 23rd, the short is also in play right here. And if we then check, let me just quickly check probability. No, I should have duplicated that, my bad. So if we then check, probabilities for this one, for gold, if the probability then support the short move, the ideal response in a normal situation is to sell, and sell, and hopefully price comes down to where we're initially expecting it to come down last week. Then, we can take some money off the table, maybe 200 pips off the table before we buy again. But I wouldn't recommend that for anybody to do, because once the price is in a specific trend, I don't like trading against that trend. Trading against that trend could lose your money, because it did lose me money a lot of times. So in the past, and I've learned my lesson. So we're still in August, and August 22nd. Let's check. So with the August 22nd, what we can see, in this scenario from tomorrow is we probably have a buy on Tuesday and Wednesday, but there isn't any much, momentum giving us something to go into for this week. This week is giving us buy. The probability is giving us buy, while the COT report is giving us sell, and the seasonality is also giving us sell. So in a situation like this, things become slightly more confusing, and what to do is kind of now a question. Let me load up notes. So it's a bit sticky, right? I have to be honest, it's a bit sticky, because from the move we anticipated last week, since it didn't happen, and we're getting to the end of the move right here, normally I'll just let it go because I already have positions in it. And I know some people don't have positions in it, and now I don't want to gamble with you guys that don't have position in it and say, we're going on the 26th, because the probability on the 26th does not fully support the buy. It's a 50-50, and then 27th, it's a sell. Then it's only the 30th and 31st that looks like a buy. And maybe let's see the 1st of September, what that's going to look like. And even the 1st of September looks like a sell, the majority of the cases. So it's kind of difficult, right? It's kind of difficult for me to make an assumption on this trade anymore, because the final move I was expecting to happen was last week, but price literally consolidated. It didn't get in the zone. I don't see why anyone should be able to lose money on this one, because it didn't really do much where we're expecting it to go into. So yeah, that's that one. The Euro USD though that we traded last week, I'm gonna go probably analyze a new asset in the meantime. The Euro USD that we analyzed last week didn't even work at all. It didn't come out at all, because the buy date was actually Wednesday as well, and price ended up going down 42 pips, and maybe still coming back up to a negative 11 pips in total in terms of minus pips. So it's minus 11 pips so far. So for some reason, USD seems to be getting strong. I don't know why. I haven't really checked any report in regards to that, why that's happening. So with the Euro USD, there isn't any straightforward move. Neither. That didn't happen last week. So bull trade last week didn't happen. A loss of 11 pips was taken. And if someone go maxed out pips, for example, you could have a, let's see what the ATR will say on the 4 hours, because that would also depend. If you follow the ATR on the 4 hours, you might have not lost any money. So the entry on that was Wednesday, and Wednesday was 18th, right? So you can actually see try to go up, but it failed. So 18th, if you had gone in somewhere around here, for example, and let's say you had 24 pips, if you do 2 times ATR, you have 48 pips. If you do ATR times 1.5, which is a 20 pips right here, times 1.5, you probably just got slightly rated out before the price actually started going back in your direction. So you will have got 12 pips with that, would be 36. Literally, price literally just kicked you out by 2 pips. And if you have a good broker, you might not get kicked out. So quite frankly, what's happening right now is things are not really panning out the way it should be. And the only thing we can do at the moment is stay patient. With the gold one, 26 to be a good time to go in, but I don't want to risk it with you guys. If you have a position already in gold, let's say from this time that we got in, not last week, the week before, then you should still hold, because I'm still holding my position. It's still like 500 and something pips in profit. You should still hold on to that. But if you don't, I would recommend letting go, slide for the meantime. Don't bother. Even the Williams looks like it's going to take a dip. It's showing that the dip is coming. So gold is most likely going to take a little bit of a dump before it then goes up, then clear this out and go higher, probably get here, and then probably get to the take profit zone around there, about 1,000 pips I was expecting. So in that case, does anyone have a question in regards to that first? What I've said, I know it's kind of like a mixed communication right there in regards to the output, but it's something that is worth telling. That's how the market is. Market isn't always straightforward. So does anyone have any questions in regards to that? If not, what I'll do is I'll do fresh analysis, look at other assets that might be in alignment, and probably we might look at that for this week. But gold doesn't look like something I would like to say anyone should get fresh position into this week. If you have your previous position, keep holding on to it. So far, you will at least 500 pips in profit. You should be fine. If not, you don't have a position, don't jump into it because it's not just doing what we need it to do at the moment. So if anyone have any question, you can post it in the chat room. If not, I would be looking at other assets that we might be able to trade. So CHF looks like a buy. So what I would do is I'll first run through the COT report, CHF. So we're looking good for a long on that. Always stick with the commercials. They're the big boys. They have the most money. So those are the guys to stick with. JPY. I don't really know about JPY. It doesn't really look that interesting to me, to be quite frank. So I'm just gonna leave JPY off the table. It's a little bit of push, but just not enough momentum for me. Euro went from being positive to now being totally confused. So leaving Euro off the table. USD, let's see what's saying. They're still slightly confused as well. It's going both directions. I want something clean. So at least if we get to trade it, we got a good opportunity coming. CAD. I remember Scotland was telling me about CAD last week, and I said I haven't looked at it, so I might probably get a chance to look at it today. CAD, then GBP. Yeah, that might work. GBP. No. Let's see AUD. I'm not gonna go through every single pairs, but I'm gonna go through as much as I can before the end of the webinar. So everything is looking long, to be quite frank. That's the this and the NZD. So it doesn't really give me that much momentum. So basically, just by looking at the COT report, I can trade these pairs. Just if you're using the COT report by itself, you can actually use it to compare with the other pairs that are not long and see, if these get strong, those other ones might most likely get weak. So let's start off with CHF. Let's see if we have a buying opportunity around the corner for CHF. All right. And then we'll go on to CAD, GBP, and AUD. So date 14th. So for the 22nd, just looking at CHF by itself, 22nd, it's looking like it's going to take a dip. It's going to dump. So CHF definitely is a no-no because it's conflicting with each other. And these are literally do analysis. I don't need to spend too long of a time doing analysis. Just find a short way to do it. You can literally complete a full analysis in 20 minutes of the entire chart, so the entire 32 pairs, like 20 minutes, entire 32 majors anyway. So CAD is long. Let's see if we have any long move coming. Yeah, we have long move coming from 26th, right? So 26th look like we might have a CAD long. But this is something you have to be very careful about, because 26, then 28, then it's most likely going to take a dump, right? So Thursday, Friday might be a good time. So I'll just put. So this is just to make sure that I'm looking at the right place. I don't need to delete that for now. So then GBP and AUD next. GBP. So GBP looks like it's taking a dump as well. You know, looking at this, GBP looks like it's taking a dump. So I wouldn't touch that, delete that out of the range. Then the next thing is AUD. Let's see what AUD is saying. All right. AUD is also taking a dump. All right. So the only pair that we do have that aligns is CAD. So that's a question. USD CHF. I mean, last week, I remember last week when I spoke about it, we were meant to come out of that. Because I remember I said USD CHF last week, we should come out of that trade, I think. I did say that I wouldn't personally trade it anymore. I think that's it took a, it took a dump, right? Or went up, I don't know. Let's see. I actually performed a little bit well. It took a dump prior, so, and then now it's like performing well. So because I think when we traded this, we were was it this pair we traded? Hey, hold on. I can't remember if we actually traded USD CHF. If you have the long position from last week and it's still holding strong, then let's see. We might need to check the USD. If your position is still holding, let me see what the USD is saying. And I'll go back to the analysis that was there. If the USD still looks like it's going strong on the seasonality, then you might have to hold. Doesn't really seem like an alignment to me. I mean, on the 23rd, USD might, there's a might possibility, because from the 15 years, it's consolidating. The 5 years is meant to take a dump. And the 40 years normally just takes a dump around this time. So price might actually pull up. Yeah, it might actually pull up because let me see. Hold on. So on the 18th. Yeah, so it didn't take this dump on the 18th. The fall on the 18th didn't happen. So you might be okay. Excuse me. Right. Excuse me. Let's go up. Let me check. Let's see what the CHF seasonality is actually saying. If the CHF seasonality gives something good, you might be okay. You might be okay to keep holding, because the CHF seasonality is taking a dump, right? And then the USD seems like it's about to rally. So you might be okay. You might just be okay. You might be perfectly okay. You don't need to cut it. I would say monitor the position. That's what I would say you should do. Monitor and see what's happening. You know, just don't cut it like that, because you don't want to cut out the trade and then notice that, you know what, it's actually now going you know, very good. So yeah, so I would personally say monitor, but trail it. Have a trailing stop working with it, so that way you don't miss out on anything too much. But make sure your SL is in a profit zone and you're trailing it. Yeah, it looks like that on the seasonality anyway. I mean, on seasonality, it shows that it's taking a dump. This is USD that I'm looking at now. CHF. It's been, if we check the CHF seasonality, it looks like that. Yeah. So today's 22nd, right? So 23rd when market opened, that's literally the peak. Looks like it's gonna dump. And if we look at the COT or CHF, it gives a buy. So the bias is confusing. You know, one is telling me it's gonna buy, one is telling me it's gonna sell. So I personally would just not touch it. I would not touch it because it's telling me to buy on COT. Then what's it called? Seasonality is telling me to sell. Because if we look at, now this is showing a buying power. It's confusing. The market is literally in a, to me anyway, personally, it's looking slightly confusing for this week coming in regards to this asset. So I wouldn't want to touch it. But you know, looking at where it is right now, it looks like it's gonna dump. Euro, let me check Euro. Apologies, I will go back to the analysis in a second, but let me just see Euro. Okay. Wow. Euro 2 looks like it's about to dump on the 23rd. Yeah, Euro looks like it wants to dump. I'd actually might look to trade this against the CAD. Let's see, because CAD is going long, right? The probability of that looks long. And if we actually look at the Euro COT, they're taking out position from both sides. So it should actually show short because it took out more position from the long. Yeah, it just showed a tiny bit of short coming through. So in that case, to be quite frank, I want to see Euro CAD. If Euro CAD gives, in regards to what's it called, Euro CHF, I don't really know because Euro is showing that it's gonna dump on the seasonality. Euro CHF is also showing a dump, but CHF shows a buying power coming in on the COT report. So Euro CHF, for example, if you go based on that, which is a high risk trade, you should be looking at Euro CHF actually do falling. CHF gaining a little bit of strength against the Euro. That might happen, but I'm not sure. You can never be 100% sure in this game. I just want to see what this thing is looking like. Yeah, so Euro CHF has that 64%, then 50-50, then 77%. I don't really like the 50-50 in between. But with that, just by looking at that, I can still risk it for this one. I can risk it for the biscuit in this one. So if I was to trade, for example, I might actually take the Euro CAD. Let me try to find if it looks good on the chart. Yeah, beautiful. I would take the Euro CAD. The Williams already diving, and you can see that pin bar right there, literally raiding everybody out. You know, if you sold at this point, raid everybody out, and then got some people to buy thinking it's going up, and look, clotheslined everybody literally. So most likely this might fall below because last time when price pressed above the 200, this is 200 EMA by the way, it's just right. Last time like they went above the 200. You see what happened? Price stayed above it for a day, then boom, the next day bottomed out. So most likely Euro CAD would be the one to go into. I'm actually looking at this one, Euro CAD. So yeah, I'll call it medium risk because Tuesday seems to, Tuesday seems to be 50-50. So I'll probably move my stop loss into the professional by Monday, end of Monday. So ideally what I want to see is price, probably hitting one of the resistance points. So price probably getting somewhere back here. So around this zone right here is good for me. If price gets somewhere around here, then I can short this asset because from all of this up momentum going, price is definitely going to come back down somewhere around here. So that might be 200 pips on the table. If I say from here, for example, to here, yeah, that's 246 pips on the table to collect from Euro CAD. So this one looks good. And ideally, this is the type of trade I might actually, say I want to trade because looking at just the daily bar, the daily count already, that looks good. It's a massive raid. So I know there's definitely liquidity right here. They've raided these guys. So to create that liquidity, most likely price is going to come back, try to raid some of the guys that got in and then dump. So I want to go in around here and take profit will be somewhere around here because that's where the EMA is. So price is probably going to get trapped between the two zones. And if we look at that zone right there, that's literally around the same place I said my take profit is going to be. So 200 EMA, price at 200 EMA. Around the 20 EMA, price would actually resist. You will see resistance there, but price should ideally break that and come to the 50. You should get more resistance, but price bounces between the 50 and the 20 a little bit, and then price breaks down finally to 200, which should be the take profit zone. And then price probably resist and support and goes to the 50 and bounce between it. I don't know if we'll break below that. I am not really sure. But looking at the seasonality for Euro is most likely going to dump up until the 4th. So for almost 2 weeks straight, 2 weeks, exactly 2 weeks straight. It's going to dump this week to next week. So Euro could most likely do the dump. And for the fact that CAD has a little bit of, that long coming from the COT report and also that long coming in from the seasonality, if we look at the seasonality, there's Euro CAD might be a good trade to just focus on. It's 200 something pips. It's not that much, but with 200 and something pips, even with a good lot size, you should be able to make some decent amount of money from that. I mean, what I can see from, where's this one? Yeah, this is actually showing the strength coming in from the 26th, which 26 should be Thursday. Damn. Okay, it's not going to be a medium risk. It's going to be a high risk because the buying power is coming from that. But if I go just based on Euro, what's it called? Just on Euro seasonality, it's going to look like a medium risk trade, but it's literally a high risk trade because the CAD, the main base construct, isn't really given the entry date around there. So, yeah, Euro is most likely going to dump because it's done it for the past 20, 15, and 5 years, dumping on that date, on the 23rd. So, the 23rd is tomorrow. So, most likely Euro will lose momentum. And just by looking at it from this angle anyway, it looks like that. So, let me see. Yeah, looking at it on the weekly as well, look, it hit the 200 and also the 50, literally bang on stopped on them. So it's most likely going to create a wick to the upside and then boom, come back down. At least we should see a decent size wick to the upside before the down play. Euro JPY, all right. Let's see JPY. Get this card off the table. Euro JPY. I want to leave that on because as much as it looks like a very small analysis, this is literally my analysis on this trade, and I already know what to do. I just need to turn on the EM. So Euro JPY. I mean, the Williams shows the up move is about to happen in this, but market is funny, man. I just don't know how to explain this to you because definitely Euro looks like it's gonna dump, but I can't really say fully if it's gonna keep dumping. So if it's gonna dump, it's most likely gonna get to the 200 EMA and the 20 or somewhere in between and then dump further. But I want to see what the JPY is saying. If the JPY looks as if it's gonna have a little bit of strength during that time period, then that's gonna be good. But the JPY also looks like a dump around that period. So it's two assets dumping themselves around that period, I don't know. I don't think euro is gonna rally. And if we look at the COT, let's see what the COT for JPY looks like. Maybe if we have a small buying momentum, look, we have that sell, and they're taking up the position from the long in what just happened to my computer? They just took out a position, 4,000 position from their long side. Even the non-commercials are not sure. What we most likely gonna see is this looking like a dump anyway. Yeah, it's looking like a dump on the scale. So Euro JPY, I don't really know the consensus with that one, so I can't really say much. But what I can do is I can compare that to CAD JPY, right? If the CAD JPY asset looks good in regards to the timing, then that might be it. But that doesn't even look good neither, because 23rd is giving me a sell on that day. But 26th was actually the day we're looking at on the CAD. 26th is the one looking at on the CAD. Okay, so yeah, 26 right here for that takeover to 20, 27, 28, and then a dump further. So with that, CAD JPY on the 26th might be a good time to go in. It's a high risk trade, but if you go in on 26, you have to set your stop loss in the profit zone, because 27 you might take that back, and then this is most likely going to happen for the rest of the week coming. So for the week coming, it looks much better for the week coming than what it looks now. So in regards to that, Euro JPY CAD JPY will probably be best for next week, but Thursday could be a quick one if you want to scalp. I don't scalp, you might want to scalp it out. But what's most likely going to happen is price most likely going to consolidate between the 200 and anywhere here that price found support. And then on Thursday, come Thursday, price goes up a little bit, so don't trade this. I'm just putting it down just for reference. JPY. So Thursday might look like a long on the CAD JPY. GBP doesn't really look good on the COT report. Let me check it again. All right, let's see. I might not be able to go through this entire CAD stuff. So if you guys have a membership, oh yeah, I forgot the discount code. I was meant to send out the discount code last week. I'll send it out as soon as we finish this now. So yeah, discount code can be applied. So for people that don't have access to the tool, they can actually analyze it themselves and check the probability reports themselves, and what's good for that. GBP, yeah, GBP is confused, bro. According to the let me see. No, actually, it's not really confused. It's actually going to dump. It looks like it's going to dump till Thursday. So GBP might actually dump to Thursday. Right here. So 4 from now to Thursday, which then also leads me to check GBP CAD. If we get that, dump from that, no, it doesn't really look good. It's a sell, buy, sell, sell. It's okay. I mean, it's a high risk one, but you can sell it on Monday. GBP CAD can be sold on Monday. It's super high risk, actually. I'll put it there. You guys don't quote me on this. I don't trade like this. GBP CAD, but for something to look at, just for reference points. High risk. So basically, it's a high risk one for me anyway. Yeah, this week is extremely funny in the way that it's set up. So that's why it's everything's kind of slightly confusing. With the gold asset, for example, I mean, for the guys that got in from here that's still holding, you're good. You're 500 pips in profit, you're good. I still think gold will come down somewhere around here into this green zone properly, because he just tapped into it last week and then left. I'm expecting gold to get somewhere in here, deep enough in here, then start going up. So I wouldn't advise the new guys to trade this. If you'll be trading gold already and you have your position in, as we spoke about the week before, I know last week, the week before, and you had your position and you're still in, then you should probably hold it. I'm holding gold for the 1,000 pips profit TP that is around here. So with gold right now, everything seems to be a little bit off key, but you know, it might definitely move up. I'm also on that consensus in regards to gold moving up, you know, moving up on that one. That's literally what I'm expecting and what I'm hoping for, but I can't really say people should, you know, trade it because it doesn't really look good. So what we're probably going to expect is go bouncing down here and then reach here, for example, then get support from, once it breaks over, get support from all the 3 EMAs and then push to the upside. Okay. So yeah, that's that one. In regards to that, so that's basically what I have for you guys. I mean, the only trade that may be able, you know, to trade might be this Euro CAD, but it's a high risk trade. You can trade GBP CAD as well, which is a high risk trade, because keep in mind that CAD doesn't have that what will I call it? Doesn't have that seasonality backing on Monday. It has it on Thursday instead. So going in on Monday is me going in on the seasonality of the euro, which is normally not the way I would trade. You know, I would ideally wait for Thursday to trade this one, but it's a high risk trade for, you know, just in case the move is about to happen on Monday. If you're on standby, you can trade it. But from what I'm looking at, just because of the price action that I'm looking at on the daily chart with this one, I'm more inclined to focus on Monday, you know, seeing price to come somewhere around here, then taking a sell on that one. On the GBP CAD, I don't even know what does that look like. Yeah, GBP CAD as well. I'm not really sure, you know. I truly am not sure about this one. I wouldn't even recommend trading this one, you know, but you know, I wouldn't recommend trading this one. I'm just gonna literally start it out right there, so you guys know. I do not recommend that one. Oh, my connection is unstable. So I don't know if you guys can still hear me, but my connection seems to be unstable now. So with that one, I'll start that one, you know, and this one, you know, this one should be good to go. CAD JPY on Thursday. So I would say Thursday seems to be the, yeah, Thursday seems to be a good one on CAD JPY, but it's a 1-day trade. I don't trade 1-day trade, so I'm going to start that. So that's literally it for today's webinar, guys. Thank you for attending. I really appreciate it. Yeah, patience is the key. So thank you very much, bro. So patience is the key, guy, as you know, as one of us has already said, and let's keep it all fun and good, and just wait to when you get that perfect opportunity. So I'll catch you guys in the chat room, guys. Take care of yourself and have a lovely trading week ahead.